It's easy to just see NASDAQ as this huge name in finance, but its beginnings are actually pretty surprising. Picture this. The 60s and 70s, right? Trading in smaller company stocks was kind of the Wild West back then.
Right, very different landscape.
Yeah, there was a real need to bring some order, some efficiency to that, and bam, along comes NASDAQ, the world's very first entirely electronic stock exchange.
It's quite something. And it's fascinating to consider how revolutionary that shift, to an electronic network truly was.
Totally.
Before NASDAQ, a lot of this trading was just done over the phone. It lacked transparency, speed.
Right.
So the move to a computer system wasn't just like an upgrade. It fundamentally reshaped how capital markets operated. It really set a precedent for exchanges everywhere.
And when we say everywhere, we're not kidding. It's almost mind-boggling that the technology NASDAQ pioneered is now used by, over 100 stock exchanges?
That's right. In 50 different countries, it's become this quiet, but incredibly powerful force behind so much of global finance. What's fascinating there is how a solution born from a specific U.S. need, bringing efficiency to unlisted securities has become such a foundational technology globally.
Yeah, it really shows the power of innovation, doesn't it?
Absolutely, shaping market infrastructure.
Okay, so within NASDAQ itself, it's not just one big pool of stocks, is it?
No, not exactly.
We're really talking about two main marketplaces, right? There's the national market for the bigger companies.
Yes, the larger, more established ones.
And then the small cap market, which focuses on those smaller, maybe earlier stage growth companies.
Precisely. Focused on growth potential.
And in total, that's over 5,000 listed companies? That's huge.
It is a very significant number. And you've got the tech heavyweights like Apple and Microsoft right there on the national market.
Right, the big names.
Exactly. These two tiers allow NASDAQ to support a really diverse spectrum of companies, from the giants to those just starting out. And having over 5,000 listings really highlights its significance. It's a major hub.
And it's not just contained within the U.S. either. NASDAQ has a real global footprint, doesn't it?
It does. They operate in nearly 30 markets across the U.S., Canada, Scandinavia, the Baltics, where they handle trading in all sorts of securities. Plus, they also run the behind-the-scenes stuff, the infrastructure.
Like clearinghouses.
Yeah, central depositories and clearinghouses in both Europe and the U.S. It's a much broader operation than just, a stock ticker in Times Square.
Definitely more than meets the eye.
And if you think about the bigger picture, their involvement in clearing and settlement is absolutely crucial. It ensures the smooth, secure functioning of these markets.
Like the plumbing, right?
Exactly, the plumbing of the financial world. And NASDAQ plays a really significant role in maintaining it.
Okay, so we've got the backstory, the scope. But let's get down to the nitty-gritty. How does the trading actually happen? It's all run by computers now, right? That original electronic vision is still the heart of it.
Absolutely. The core of NASDAQ's operation is its fully computerized trading system. It uses sophisticated algorithms to match buy and sell orders electronically.
Okay.
This is what allows for the speed and efficiency that have become, the standard for modern stock trading globally. It's a far cry from the old manual systems.
Yeah, it's almost hard to imagine going back to those slower ways of doing things. So if a company today looks at NASDAQ and thinks, okay, we want to be part of that, what's the path? What do they actually have to do to get listed?
Well, it's a detailed process. There are specific regulations, and they vary depending on the type of security they want to list and the size of their business.
Makes sense.
And there are several layers of fees involved, too. Just to apply, for instance, a company can expect to pay between, say, $5,000 and $25,000.
Wow, okay. So even getting your foot in the door costs something.
It does. It requires a significant initial outlay.
And that's just the application fee. There's more after that, I assume, like an entry fee.
That's correct, yeah. The initial listing fee, or entry fee as you called it, that can range from $50,000 all the way up to $270,000.
Whoa. Okay, that's serious money.
It is. And beyond that, there's also a fee that's calculated based on the total number of shares the company wants to list. That can add another $100,000 to $150,000. So yeah, it's a substantial financial commitment. Companies really need to be prepared for that.
Definitely something you need to factor into your business plan way ahead of time.
Absolutely.
What about the more concrete requirements? Like how many shares do you need out there? And what about the share price?
Right. There are mandatory criteria. For instance, a company needs to have at least 1.25 million shares available for public trading.
Okay.
And that excludes shares held by the company's key insiders,
Right.
anyone with more than 10% ownership.
Got it.
For U.S.-based companies, their stock has to maintain a minimum bid price of $4.
$4. Okay.
And generally, trading happens in round lots with a minimum lot size of 450 shares, typically bought and sold in blocks of 100 or more.
And it's not enough just to have like a few big shareholders, right? They want broad ownership too.
Precisely. NASDAQ-Q requires either a total of at least 2,200 individual shareholders, or alternatively, a minimum of 550 shareholders combined with significant average trading volume. Specifically, 1.1 million shares traded on average over the previous 12 months.
Right. So real liquidity.
Exactly. And naturally, they need to be officially registered with the Securities and Exchange Commission, the SEC.
Of course. All of that makes sense, ensuring there's a genuine market for the stock. What about the company's health itself, the financials? Are there specific profit or cash flow numbers they need to hit?
Absolutely. NASDAQ-Q has financial benchmarks. They want to ensure a degree of stability among the companies they list.
Makes sense.
So one way to qualify is to show a total pre-tax profit of at least $11 million over the past 3 years.
$11 million over 3 years.
Okay, with at least $2.2 million in each of the last 2 years, and crucially, no net loss in any of those 3 years.
Well, losing years in that period.
Right. Alternatively, they can demonstrate strong cash flow. Total cash flow of at least $27.5 million over the last 3 years, again, with no year having negative cash flow.
So consistent cash generation.
Yes. And there's also a market cap requirement. The company needs to have an average market capitalization that's the total value of all their outstanding shares of at least $550 million over the previous year.
$500 million, roughly.
Roughly, yes. So NASDAQ-Q is definitely looking for a solid financial track record.
It sounds like quite the hurdle race.
Yeah.
So it's obviously not a lightning-fast process. If a company ticks all these boxes, gets everything in order, about how long does it typically take to get the green light?
Well, assuming all the rules are followed, the application is complete and accurate, the approval process itself generally takes around 6 weeks.
6 weeks. Okay, that's maybe faster than I would have guessed, given all the requirements.
It can be fairly efficient if everything's in order.
Okay, so they've jumped through all the hoops, they get approved, and then they get put into one of 3 different market tiers, right? Can you give us a quick rundown of those?
Certainly. So at the top, you have the Global Select Market. This is for both U.S. and international corporations that meet very, very high standards for market value. They have the most stringent listing requirements.
The top tier.
Right. It's really seen as the premier segment within NASDAQ.
And the next level down from that.
That's the global market. It's considered a mid-cap market, again, for both the domestic and foreign companies.
Okay.
What's interesting here is that NASDAQ actively reviews these companies every year. And if they then meet the stricter criteria of the Global Select Market, they can actually get moved up.
Oh, interesting. So there's mobility.
Exactly. There's potential for progression, sort of like moving up a league, as you said.
Yeah. And what about the third tier?
The third is the capital market. This used to be called the small cap market. And as the name suggests, it's designed for businesses with smaller overall market capitalizations. It provides a platform for those growing companies to access public markets.
It's interesting how they cater to different stages, and I know we've seen some Indian companies choose to list on NASDAQ over the years. Can you give us a few examples? Why might they do that?
Yes, definitely. There are several well-known Indian companies listed there. You've got Make My Trip Limited, Rediff.com, Yatra Online, Sci-Fi Technologies, and more recently, Freshworks.
Right.
For these companies, listing on NASDAQ-Q, well, it can provide access to a much larger pool of international investors, potentially higher valuations too.
Global visibility.
Exactly. It enhances their global visibility and credibility significantly.
Okay. So we've been talking a lot about NASDAQ-Q, the exchange, the place where stocks are traded. But the name NASDAQ-Q also refers to something else really important, right? The stock market index.
That's absolutely correct. The NASDAQ-Q Composite Index. It's a key benchmark, especially for the tech sector's health and the broader market too.
And it includes a lot of companies, doesn't it?
It does. Over 2,500 companies. Essentially, it includes all the companies that are listed and traded on the NASDAQ stock exchange itself.
And it's really famous for being heavily weighted towards technology companies, isn't it? When you hear NASDAQ-Q Composite, you immediately think of those big tech names.
Oh, absolutely. Companies like Apple, Microsoft, Alphabet, which is Google Meta, formerly Facebook, Amazon, Tesla, they're all huge components.
They drive a lot of the movement.
They really do. They heavily influence the index's performance, and this tech focus has been a defining feature really since the boom years of the 1980s and 90s.
Right.
Of course, as we saw with the dot-com bubble back then, this concentration can also lead to greater volatility when the tech industry hits bumps in the road.
Good point. So if a company manages to get listed on the Nasdaq exchange, does that mean it automatically gets into the Nasdaq Composite Index?
Not necessarily, no. While listing on the exchange is the first step, a prerequisite, there are additional criteria for actually being included in the index calculation.
Ah, okay. Like what?
Well, the stock generally must be common stock, although some other types of securities are also eligible. Things like limited partnership shares, REITs, real estate investment trusts, and ADRs, American Depository Receipts, which represent shares of foreign companies.
Okay.
But things like ETFs, exchange-traded funds, and other kinds of derivative securities, they aren't included in the index calculation itself.
Got it. So it's mostly operating companies.
Yeah.
Okay, so if someone, maybe one of our listeners, wanted to invest in the performance of this whole index, rather than trying to pick individual winners and losers, how would they typically do that?
Yeah, that's a common approach. The most straightforward way is usually by investing in mutual funds or exchange-traded funds ETFs that are specifically designed to track the Nasdaq Composite's performance.
The NIX funds, basically.
Exactly. These funds hold a basket of stocks that mirrors the composition of the index, so they give investors broad exposure with a single investment.
That makes sense. Now, let's shift gears slightly to the practical side for traders. What are the standard hours? When is the Nasdaq Stock Exchange actually open for business?
Okay, the regular trading hours for the Nasdaq Stock Exchange are Monday through Friday from 9:30 a.m. to 4:00 p.m. Eastern Time.
9:30 to 4:00 Eastern. Got it.
Yeah.
But I know there's often activity happening outside those main hours, too. Pre-market and after hours.
Yes, that's right. Nasdaq also facilitates pre-market trading sessions. Those run quite early, actually, from 4 a.m. right up until the official open at 9:30 a.m. Eastern Time on weekdays.
4 in the morning. Wow.
Yeah, and there can also be special after-hours trading sessions, although these often have lower trading volumes, less liquidity, and potentially different risks associated with them.
Good to keep in mind. Now let's bring it home for our listener in India, or really anyone listening from outside the United States. How can they actually invest in these Nasdaq-listed companies? What are the main ways?
Right. For Indian residents, and this often applies to many international investors, there are really two main paths to access Nasdaq-listed stocks.
Okay, what's the first?
The first is probably the simpler one for many. Investing through Indian mutual funds that specifically focus on investing in U.S. stocks.
Ah, funds based in India that buy U.S. shares.
Exactly. These funds pool money from Indian investors and then invest in a portfolio of American companies, many of which, naturally, will be listed on NASDAQ. It offers a relatively accessible route.
Yeah, that sounds pretty convenient. Less hassle with setting up overseas accounts and whatnot. What's the other main option?
The second option is to invest more directly. This involves going through Indian stockbrokers who have established partnerships or connections with U.S.-based brokerage firms.
Okay.
This allows individuals to actually open a trading account in the U.S. and then directly buy and sell shares of companies listed on NASDAQ.
So more direct control.
Yes, more control over individual stock picks, but it might involve a bit more complexity. Account setup, understanding U.S. regulations, currency exchange, things like that.
Right, pros and cons to each. So a couple of clear paths there for investors around the globe wanting to tap into the NASDAQ market.
Mm-hmm.
So just to kind of wrap up our deep dives today, NASDAQ started as this really innovative, first-of-its-kind, fully electronic stock exchange way back in 1971.
Quite a while ago now.
Yeah, and it's since grown into this major global player. It's home to over 5,000 companies, with a huge chunk of those being in the tech sector.
Definitely tech heavy.
And the NASDAQ Composite Index, which tracks over, 2,500 of these companies, is a really important indicator for both the U.S. and the wider global economy.
Precisely. From its pioneering electronic trading system to its diverse range of listed companies, both big and small, and its influential market index, NASDAQ undeniably holds a central position in the world's financial markets today.
It really does. And it makes you think, given NASDAQ's history of constantly adopting new technologies and its current role as this major hub for tech and high-growth companies, what future trends do you think will most significantly shape its evolution? How will it continue to influence the global financial landscape? Definitely some food for thought there.